Welcome back to another video. In this video, guys, we're going to break down paper trading and back testing. I'm going to break down what is a paper trading account, benefits and drawdowns of a paper trading account, and what is back testing. So let's jump right into it. What is paper trading? So paper trading is trading the real markets with fake money. There's basically no risk when you paper trade. Paper trading is a great way to start to get your feet wet. It's a great first step to take if you're someone that has never ever traded before. So the whole idea of paper trading is you get to feel out the markets, you get to feel out the platform, and you kind of get your feet wet without actually risking any real capital. The problem a lot of people make is they jump into trading day one with real money and they make a lot of minor stupid mistakes which could be avoided if they actually practice. So the idea of paper trading for you should be, hey, I've never traded, so I want to practice, I want to get comfortable, I want to place orders, I want to buy and sell and see what happens, so I actually get myself to a comfortable level. And that's what I want you guys to do. I want you to start out opening a paper trading account. Now, one thing I want you to keep in mind is when you're paper trading, do not paper trade more than 30 days. The max you should paper trade is 30 days, and I'll explain why. That is the max you should paper trade, no longer than 30 days. So what platforms offer paper trading? We have TD Ameritrade and we have TradeStation. Now, if you can open up a TD Ameritrade account, I would suggest just use TD Ameritrade. They have a paper trading account. It's free. You don't have to pay anything. There's other platforms out there as well that offer paper trading. You guys can take a look at that, but I would recommend going with TD Ameritrade. Once again, their paper trading is completely free. Okay. Now, what are the pros and cons of paper trading? So there are some cons of paper trading. Everyone would be like, what are the cons? How can paper trading have any cons or any downside? Well, I'll get into it. First, let's understand the pros. What are the pros of paper trading? The pros of paper trading is, number one, you have no risk. So when you're paper trading, you're not trading with real money. You're not putting on any risk, which is good, especially for someone starting out that needs to get more comfortable with the platform, get more comfortable with trading, and see everything happen in front of them before jumping in with real money. So there's no risk. That's the first pro. Second pro is you get comfortable with trading. You get comfortable with the platform. You get comfortable with the whole idea of trading. You get to, kind of experience everything live, firsthand, instead of just kind of reading about it or seeing someone else do it. You're actually doing it yourself, which builds a lot of comfortability. So when you do jump to a real account from a paper trading account, that transition becomes a lot easier. And then finally, you get to test your skills. You get everything you've learned. You get to test how good you are, what you need to improve, what you need to take a step back from. And then, you can kind of take it from there before you actually go in with the real account. Now, that's the pros. What are the cons? The cons of paper trading is, number one, slippage and emotion and commission. So obviously, when you paper trade, right, you're not going to face slippage. You're not going to face, major commission depending on what platform you're dealing with. Slippage, for anyone that doesn't know, is basically the price you actually get filled on versus the price you think you're going to get filled on. So for example, if a stock is trading at $5.37, right, the buyers are at $5.30, the sellers are at, let's say, $5.40, and you want to buy the stock, you might actually get it for $5.40, which I'm going to explain in an upcoming video. And slippage on a real account, you might actually pay a higher price. Paper trading is not going to factor in slippage. It's just going to give you whatever price there is based on, instead of a real account, which is actually where you're actually going to have to fight for the shares. You're going to actually have to get the shares from someone that's looking to buy or sell them. So this is the first con. Second is emotional reality. When you paper trade, guys, it's completely different than trading on a real account. When you paper trade, there's no emotions, there's no fear, there's no anything that steps in. Right? On a real account, your emotions step in. You have real money. You're more afraid. You double think everything. You double guess everything. There's a huge emotional reality that steps in when you use real money. So if you paper trade and you start doing a great job, do not automatically think that, okay, when I go on to a real account, I'm going to do the same thing. No. The whole idea of a paper trading account is for you to get comfortable. But if you do super well on a paper trading account, do not think that on a real account, you're going to perform at the same level. Next, unrealistic order fills. On a paper trading account, if you want to buy, let's say, 10,000 shares or 100,000 shares of stock ABC on a paper trading account, you'll get them. On a real account, you have to actually buy them from a real seller. And no one might be selling 100,000 shares at that moment for that stock. So you might not get filled on a real account, but on a fake account or a paper trading account, you might get filled. Next, on paper trading, there's no market makers. Market makers do not exist, right? Remember, market makers are stepping in. They're the ones making up the market. They're the ones buying and selling your shares. They don't exist on paper trading. And since they don't exist, they're not going to be there to take your stop losses. They're not going to be there shaking you out of your position. So they don't exist either. Next, with paper trading, you may develop bad habits. Like I mentioned, paper trading, there's no emotion. Since there's no emotion, you might do a lot of bad trading when you're paper trading, and you might end up making money. What tends to happen is people carry those same habits over to real trading, and they think they're going to make money, but it does not work. So the only thing you should keep in your mind when you're paper trading, guys, is that the idea of me paper trading is to get familiar with the platform, get comfortable with trading, which is why when you paper trade, you should not paper trade more than 30 days. No more than 30 days. Do not paper trade longer than 30 days. When you paper trade, you stop learning after a certain point. If you really want to improve your trading and become a good trader, you trade on a real account and you practice on a real account where there are market makers, where there are emotions, where there is slippage, where everything exists for you to get better. The first 30 days, maximum amount of time you should paper trade is when and where you should practice the platform, get comfortable with it, get comfortable with doing your analysis, and take it from there. After 30 days, you should fund your account. That depends on you how much you're gonna fund it, but you should fund your account. Another thing with paper trading, when you paper trade on some platforms, they give you maybe, let's say, $100,000 to trade with. Now, if you're starting out and let's say you start out with $5,000 with the real money, you should not paper trade with $100,000 because that is two different amount of capital sizes. So if you're going to start with real $5,000, you should only paper trade with $5,000 too. So your losses and profits are similar when you go to a real account. So factor that in. Now, if you're someone that's like, I don't want to paper trade, I want to jump right into real trading, cool, go ahead. But I would recommend for you to paper trade for a week, maybe 2 weeks, get comfortable, but no longer than 30 days. That should be the cutoff time. And then open up a real account, fund it, put in a 500, $100, $1,000, whatever the case is, just so you can get comfortable and get better at trading. You are going to need to be on a real account to really improve your learning curve. Paper trading is only going to improve it by so much. So keep that in mind, guys. Now next, what is backtesting? Backtesting is the process of testing a trading strategy on prior time period. So what platforms offer backtesting, and I'll break down what backtesting is a little bit more, is TD Ameritrade has it. Once again, if you can open up a TD Ameritrade account, I would recommend using TD Ameritrade or Trading Sim. Trading Sim is a separate website that allows you to basically backtest. Now, there's a lot of different combinations of backtesting. What some people use backtesting as is they create a strategy and they put that strategy from, let's say, January 2018 till now, and they see how that strategy works. Did that strategy make me money? Did it make me lose money? How much times was I right? How many times was I right? How many times was I wrong? What do I have to change? That's what a lot of people associate backtesting with. But now these two platforms have something in backtesting which is very beneficial, especially TD Ameritrade. This is where you can go back in time and trade that same stock with the same exact price movement. So for example, I can go to March 11, right? Let's say I go to March 11, 2019. If I go to March 11, 2019, 9:41 a.m., right? It'll show me exactly what happened on March 11, 2019, 9:41 a.m. and everything afterwards, where the stock went, what happened, and I can actually trade the stock at that moment. That's the idea of backtesting. That's what I'm talking about. TD Ameritrade has something called on demand, right? Which is a form of backtesting. On demand feature. That on demand feature allows you to go back in time and practice. It's kind of similar to paper trading in a sense, right? But with paper trading, you can't go back in time. With on demand or back testing, you can go back in time and you can trade a certain stock. So let's say one day I traded Netflix, right? And you see, okay, he or she traded Netflix this day. I want to see if I traded and what I do. So you go to that day, whatever day it is, you go to that time, and minute by minute, the stock will move the same way it did at that time period, and that will allow you to become a better trader. And this is one thing that we are going to do in this course, in this full training. I'm going to give you guys some stocks to actually use the on-demand feature on TD Ameritrade or Trading Sim for you guys to practice, for you guys to get better at, right? So for example, in one of the upcoming videos, I'm going to show you guys certain strategies, certain chart patterns, certain ways to analyze a stock. And then I'm going to give you a stock. I'll say, hey, on January 12th, 2018, I want you to trade stock BAC, right? I want you to start at 9:30 a.m. till 11 a.m., right? So you're going to treat that as a real trading day. Even though today isn't January 12th, 2018, and we're ahead, you can always go back to that date and I'll give you information. I'll say, okay, this is how I want you to trade it. This is what I want you to look for. And we're going to focus on just price action so you can get better at trading. You can get better at getting in, getting out, and understanding how a stock moves. And that's the best way, in my opinion, to actually practice before you go on to opening a real account and using real money.